Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Wednesday, March 25th. To the S&P 500, and here we see a very large black body candle forming for today's trading. If you recall, yesterday we were looking for a continuation to the trend that began for yesterday's trading, a candle with a lower high and a lower low. Another black body candle, much larger than the day previous, and the way that this trend has developed suggests that the sellers certainly have been increasing their strength as the trend's been developing to the downside. With the previous day's trading, if you recall, we had the sellers in control, strong momentum to the downside, and importantly they breached that 2100 round number and the 2093 level in a bearish manner. And I suggested that there was a very real possibility of them testing to the upper zone here, this highlighted yellow area, to the upper edge of that zone. And I was expecting some very strong resistance or support to come in around that area, with the Kijun-sen and the Tenkan-sen trading around there. Now, the sellers have been very strong in being able to breach that level of potential support. They've taken it out by a long way. The sellers have closed with control once again by closing down towards the low. They've shown that they're very strongly committed to the downside by breaching that area in a very strong manner, and also the large size of the black body of the candle suggests that the net momentum that the sellers have controlled has been much larger than the previous day's trading. Now the problem here is that it's a little bit too large, and it's something of an extreme day, and very often when we see these extreme days we then see the buyers attempt to come into the market for the next day, not perhaps strongly, but there is a chance that that could happen. But what we do see is a weakening of the sellers, so we will be looking for that. Now, combined with the potential support of the Ichimoku cloud close by around the 2056 level, we certainly could see the support coming in around there and the sellers lose commitment down below that level. Now, if the sellers are strong enough to breach through that area, we have potentially strong support down to the 2040 level and to the bottom of the Ichimoku cloud at the 2037 level, and just above there, that 2040 level corresponds to the bottom of that highlighted zone of support and resistance. So that will be an important area to watch for. Now, if we do see buyers come into the market here, any rally may now find strong resistance around the top of that highlighted zone, about the 2079 level, with the Kijun-sen and the Tenkan-sen still trading around there. Importantly, with this breach down below the Kijun-sen and the Tenkan-sen, it suggests that we now have a change of bias in that fast-term and medium-term timeframes, with a switch from the buyers to the sellers, and that action is supported by the Chica span being below the corresponding price action. So it's suggesting now that the sellers have some downside momentum. So any buying that we come in, or any lack of strength from the sellers, may only be temporary, but a lot really does depend on the support of the Ichimoku cloud extending, as I said, down roughly to about 2037, 2039 or so. Looking next at the Fibonacci extension tool, and here we're examining the relationship of the current first time frame downtrend to the immediate previous first time frame downtrend. And an important event today with the very large black body candle taking out the 50% level, taking out the 61.8% level in a bearish manner. We do have the next target at the 78.6% level at 2054, which is just below the top of the Ichimoku cloud, so suggesting that we could see very strong support coming in there. Importantly, however, if that level is breached, we see that the 100% level is at the Ichimoku cloud, at the bottom of the cloud, and it does suggest that there's likely to be very strong support at that 100% level at 2037. Moving next to the bands here with the S&P 500, and here we saw today the market take out the bottom band failing to hold as support. We've only just breached it, but breaching that bottom band in a bearish manner does set the market up for a potential continued development of the trend to the downside. Now what we want to see here is strong follow through, so we want to see another bearish candle, but I suggest just to be on the safe side and be a bit cautious, I'd also like the market to see the market breach this swing low down around the 2039 level in a bearish manner as well. So we won't see any strong confirmation of a downtrend for probably a couple of days. So that's going to be an important test there as well. Now moving next to the S&P 500 futures here on the hourly charts, and if you recall yesterday we were watching the market break out down below the Ichimoku cloud, giving us a bearish market in that longer term time frame as well as the shorter term time frames, and it did suggest that for the daily charts we were likely to see a continuation of the trend to the downside. We were watching the market here around the opening of the session and for the first few hours, suggesting there was potential for the market to test up to the middle pivot point level and hold as resistance, and that's exactly what we've seen. As the market tested to the middle level, we had the Kijun-sen trading around there, so that strengthened the amount of resistance, and we did see strong selling coming in after that test there. The selling, in fact, was that strong that we saw the market test the first pivot point support level after it briefly held as support, and with the market attempting to rally off that level, the Kijun-sen came into play as resistance once again, with the market breaching the second level and then testing down to the third pivot point support level. Now very often when we see the third levels tested, it is an example of a very extreme trading day, and we tend to see a lessening of the strength of the sellers following that extreme day. Now that doesn't guarantee that it will, but it just tends to be so. We will be watching for the market to potentially rally. The problem here is going to be that very often the Tenkan-sen is the first place that the buyers find a resistance when the market's been selling off quite strongly. So there's an area that we will be watching very closely at 2057 roughly. If the buyers are strong enough to rally up through the Tenkan-sen, there's potential for strong resistance around the middle pivot point level, about 2066, and above there at the Kijun-sen, roughly about 2070. If the rally doesn't occur and the market continues to sell off, and there's no hint here with these current candles that have finalised trading in the last hour or so, but if the sellers do continue to the downside, then potential support at the first pivot point support level at 2042, and then down below there at the next one at 2029.